Welcome to The Explainer. Today, we're diving into a really fascinating journey. We're looking at the evolution of blockchain technology, tracing its path from basic, fully transparent transactions all the way to what might literally be the ultimate privacy solution. Now, if you follow the Web3 space at all, you already know blockchain changed the world. But there's a massive, glaring issue right at its center. So let's jump right in, look at exactly how we got here, and explore how a new project is completely rethinking digital privacy. Imagine this for a second. What if your entire bank statement was completely public? I mean, every single coffee you bought, every paycheck you deposited, every investment you made, just out there for the whole world to see. It sounds terrifying, right? Well, crazy enough, that is exactly the reality of the current blockchain landscape. We kind of operate under this illusion of crypto anonymity, but the truth? Current public blockchains expose absolutely everything to everyone. Which brings us to our first major roadblock, the public blockchain dilemma. You see, transparency was actually hailed as blockchain's greatest feature at first. It was the way to bypass central banks. But to understand how that morphed into a severe limitation, we really need to look back. When Bitcoin hit the scene, it was revolutionary. Decentralized, digital money, no middlemen. Then Ethereum came along, brought us smart contracts, and suddenly we weren't just moving money anymore. Fast forward to today, and this underlying technology is powering incredibly complex decentralized finance, gaming ecosystems, and massive supply chains. The utility has absolutely exploded. But, with that massive leap in utility came an equally massive problem. On our current public blockchains, every single transaction is public. And I mean completely public. Anyone anywhere can look up a wallet and see its exact balance. They can track your full transaction history. They can trace exactly where your funds originated and where they moved. And sure, while this level of transparency is great for auditing code, it creates a massive vulnerability for you. Basically, your entire financial profile is left completely naked. So who actually gets hurt by this? Well, the victims of this exposure span the entire spectrum. For everyday users like you and me, our personal financial info is stripped of all privacy. For businesses, the risks are heavily commercial. Competitors can literally map out their supply chains and monitor their payments in real time. And for large financial institutions, their massive investments and trading strategies can actually be guessed and front-run just by analyzing on-chain data. It's a system that ultimately hurts everyone. So what do? Well, that takes us to the first generation of solutions. Privacy coins. The market obviously recognized this glaring issue early on, and that led to a pretty heavy-handed first attempt to fix it. We call it the privacy coin paradox. Projects like Zcash and Monero used incredibly advanced tech, things like zero-knowledge proofs and ring signatures. And honestly, they provided phenomenal privacy. But they had a fatal flaw. They lacked comprehensive smart contract support, meaning you could keep your assets private, but you couldn't actually put them to work in modern DeFi. It was like keeping your money in an impenetrable vault. Super secure for sure, but essentially useless in the fast-evolving Web3 ecosystem. Realizing a vault wasn't enough, we entered the second-generation privacy smart contracts. Developers went back to the drawing board. The goal was to marry that deep privacy with actual utility. But the second generation, it created a ton of friction. Platforms like Secret Network and EVM-based privacy solutions brought on immense challenges. A lot of them required developers to learn entirely new programming languages, which is a huge barrier. Some only offered partial privacy. And perhaps worst of all, several high-profile protocols got hit with severe regulatory crackdowns. In practice, it was just way too complex and way too risky. And that brings us to our third generation, Layer 2 solutions. The thinking here was, instead of building brand new privacy blockchains from scratch, why not just build privacy directly on top of incredibly secure foundations, like Ethereum? Platforms like the Aztec network really champion this approach. But man, there was a vast gap between the promise and the reality. The promise was beautiful, ironclad Layer 1 security with Layer 2 privacy on top. But the reality? Super clunky. Relying on blockchain bridges to move assets back and forth introduced massive new risks, really frustrating delays, and opened up brand new security vulnerabilities. Like I said before, it was essentially patching a leaky roof by just putting a bucket under it. So if all of that didn't work, what's next? Enter the Anubis ecosystem. We've seen 3 generations of attempts now, right? Privacy coins had zero utility, privacy smart contracts had too much friction, and Layer 2s were just too risky. Anubis represents a completely new way of thinking about this whole problem. It's not just another privacy feature slapped onto an existing network. Instead, it's designed from the ground up as a complete blockchain ecosystem. one where privacy, security, compliance, and smart contracts literally all work seamlessly together right at the base layer. It's the ultimate synthesis, aimed directly at solving the trilemma that defeated all those previous generations. So how exactly does it do this? Well, the Anubis advantage really comes down to a clear three-step progression. First, it ensures your personal financial information remains completely secure and hidden from public view. Step 1, check. But then, crucially, Step 2 allows you to take those securely hidden assets and participate freely in modern DeFi protocols. It doesn't isolate your money. And ultimately, Step 3, this culmination leads to total digital asset freedom. It finally empowers users to leverage advanced decentralized finance without ever compromising their sensitive data. And looking at the macro scale, this is exactly why Anubis matters so much. True, global blockchain adoption absolutely requires users to own their information. Anubis is way more than just another crypto project. It's a necessary stepping stone toward the actual future of digital privacy. Think about it. Mainstream adoption, getting every single business and everyday person on-chain, is never going to happen if the price of admission is exposing your entire financial life to the world. People need to own their data, period. The ultimate vision for Anubis is a future where a better balance between transparency and privacy is finally established. We're not talking about some shadowy network for hiding things, but a balanced, functional system where blockchain is practically usable on a global scale. By getting this balance right, Anubis is positioning itself to be one of the absolute most critical projects in the space. Which leaves us with a fascinating question to ponder. As our digital and financial lives become fully intertwined with Web3, isn't owning our own privacy the ultimate utility? Thanks for joining me for this explainer. Keep questioning, keep learning, and I'll catch you next time.